test, Sharon. You need to run that thing again. I was not ready. Just take us around again so we can start afresh. Sorry. Good evening and welcome to The Link this week. Thank you for always joining us, our viewers, and we know there are those who are very ardent and they don't miss the shows. We promise to continue giving you information that you can use and opportunities. Sometimes both, sometimes one of them, but usually both. And tonight we're discussing information. And our discussion tonight is the new bank check regulations. What you need to know. There are new bank check regulations for those of you who go to the bank to withdraw money using checks, or you do checks between banks. There are things that you need to know as you transact effective June the 1st. And in the studio tonight to
January next year.
Okay, effective, I was corrected by our guest, effective January 2027.
Yep.
And my guest tonight is Mr. Andrew Kawere, Director National Payment Systems from the Bank of Uganda. Mr. Andrew, welcome. Mr. Andrew Kawere. They don't say Mr. Andrew.
Thank you, Simon. I'm happy to be here.
Very good. On the issue of the checks, let me just get my question here. I know that effective 2027 January, changes are have knocked on the door. So there are new limits on the amounts that can be withdrawn using checks within one bank and across banks.
Yes.
Take us through these changes and why the central bank is moving in that direction.
Thank you, Simon, and thanks for hosting me on The Link.
It's a pleasure.
First of all, the central bank has been and continues to implement an e-payment strategy for the financial sector.
E-payment?
Electronic payment strategy.
Okay.
And as part of that strategy, we've been implementing a number of measures. You can trace back these measures to as far back as 2018.
Okay.
In 2018, the central bank reduced the interbank check limits. If you remember, there used to be, I think, up to 50 million.
Yeah.
But in 2020, that limit was cut into half to make it 20 million.
Yeah.
And then 4 years later, in 2022, the limit was reduced further to 10 million, that is for Uganda shillings. Yeah. And right now, we are reducing that limit further again to 5 million shillings in the Ugandan currency, $1,375, 1,125 euros, and 1,100 pounds. Okay. So this means that if I'm to pay somebody where myself and the payee use different banks, the check values shall not go beyond those limits. Okay. That is one. The second key policy development is on the capping of over-the-counter withdrawals. Okay. If I walk to a bank and I'm drawing money in terms of cash, physical cash, there are going to be limits. Those limits are as follows. If I'm using my account for business purposes, now that could be a corporate account, a company account, or a personal account that is used for business purposes. You know, a sole trader, for example. My business could be dealing in produce. I could be dealing in, maybe I have a small manufacturing facility at my home, and I run the business on my account.
On that account, yes.
That is a business account. So it's going to have a cash withdrawal limit of 250 million shillings per day and a weekly limit of 2.5 billion shillings. If the account is for personal purposes, not business, maybe you use it to run your household.
Samuel Setumba's account.
Absolutely. Then that account will have a cash limit of 50 million shillings per day, and a weekly limit of 250 million shillings. These limits are not cast in stone. There are mechanisms through which the limits can be lifted. And those mechanisms have to be run by the respective financial services providers. So the banks have been guided on what to do to lift those limits. What does it mean? This means that the bank knows you. You are their customer. They know that Andrew deals in coffee, Andrew deals in vanilla, Andrew deals in maize or beans or produce in general. And so the bank will be able to make a case if in their view, and of course on my request, if in their view the limit of say 2.5 billion shillings per week is insufficient for my business. So the banks, you will approach your bank and make your case. Then the bank will work with the central bank to effect the waivers. So there are mechanisms through which those limits can be lifted, especially for the businesses, but also for the individuals. If you feel the amount is not enough, you can reach your bank and the bank will ask the central bank to approve waivers. So the central bank is not limiting use of cash. We're not banning the use of cash. Instead, measures have been implemented to reduce the amount of cash that can be withdrawn over the counter. Now, why is this being implemented? This policy aims to support the broader digitization agenda for the central bank. I've talked about the electronic payment strategy, which we've been implementing over the past so many years. This policy is seen as a response to what the benefits that we have seen as the public picks up on digital payments. If you look at the clearing house, for example, the cheques have naturally phased out.
Clearing house is where the banks meet to reconcile their transactions.
The clearing house is the setting whereby different banks come and exchange payment instructions. Andrew has paid Samuel has paid somebody else. So at the end of the day, the banks will sit together in a forum, tech-enabled of course, where that money is going to move from one institution to another. So these measures are meant to support the broader digitization. And what I was saying is that the cheques have naturally died out. If you look at 2018, that arrangement used to process about 20% in terms of cheque values. Today it's less than 6%. So naturally, the public has migrated
from checks.
Yes, people have migrated to electronic payment channels, and those include electronic funds transfers. They include real-time gross settlement transfers, and also mobile money. Mobile money, for instance, is one of the most popular transaction avenues, especially on the retail scene. So that's why the central bank is doing this. These channels are more convenient, they are more secure, they are more transparent. They offer a footprint, which is again supporting, other digital initiatives. And I can give you an example of digital credit. We've seen an overwhelming growth in terms of digital credit. And we're saying that by building these digital profiles, SMEs, individuals, even to some extent, companies, in the SME category especially, they are getting digital credit through these channels. And what better way to build the digital footprint than to adopt the electronic payment alternatives? So that's where we're coming from.
You spoke about the waiver as I make my case. Can I, as a company, can I make, with the bank, can I say a case that, give me an exemption that is long term, or every time I may have to come, every month, for instance, I'm making payments, I'll have to come and make a case?
You see, Samuel, the central bank does not run private financial institutions. So we're not prescribing. We're not doing it in a prescriptive approach. What we're saying is that there is a principle whereby if 2.5 billion shillings is not sufficient for you, and if you can't use electronic funds transfers, if you can't use the RTGS, talk to your bank. There is a relationship manager, there is an account support manager, and you'll share with them your challenges, and then the bank will advise you on how best to handle that. It could be blanket, it could be case-by-case basis, because it's all dependent on your risk profile. It's dependent on your transaction history. It's dependent on how much your bank knows you, because the central bank doesn't know you. It doesn't deal in retail financial transactions. So all of that is dependent on the case that you make to your bank, and then the respective bank will handle that together with the central bank.
Thank you very much for that clarification. And maybe
but also it's important to emphasize that personal accounts that are used for business purposes are classified as business accounts for purposes of this policy.
The bank knows.
Yes. So if I'm using my account as Andrew for business purposes, for as far as this policy is concerned, that is a business account, and it therefore attracts a higher limit by default. 250 million per day, 2.5 billion in a week.
Thank you so much. We are going for a short break, and I hope you heard, if you're dealing in checks come January 1st, 2027, there are things you need to know, and that's what we're discussing. The amounts you must transact dependent being capped, so that we use more digital approaches, and you can approach your bank for more information. We're coming back after the break, and we are still discussing the question of checks and what you need to know. Don't go away. Welcome back from the break. And when we went away, we were discussing the new bank check regulations, what you need to know. And they're coming in two force come January 1st, 2027, whereby the amounts that you transact within the banks in terms of payment using checks or across banks is going to come down. And my guest in the studio is Mr. Andrew Kawede, Director, National Payment Systems Department of the Bank of Uganda Central Bank. So, Mr. Kawede, as we went away, you had given us the what and the why. Let's deal with another facet. In terms of doing business, what inconveniences or actual system change should companies prepare for? I'm thinking I'm a business, this people brought these changes. How do you expect me to adapt?
I think, thank you, Simon. We don't expect a lot of inconvenience on that front, because first of all, the numbers that we have as the central bank already indicate that the public has overwhelmingly adopted digital payment channels. I've given you the example of the interbank payments, and checks account for only 6%. In the interbank market, we process, and that is the retail side. In a year, the central bank processes about 70 trillion worth. Now, of that, only about 6% is in terms of checks. So we already see that the public has adopted these channels. Now, two, think about mobile money. Mobile money is one of the most popular, actually it is the most popular retail payment option, processing about 390 trillion in a year.
That's big.
390 trillion.
That's big.
And that is in their ending March. So what we're saying is that we don't expect significant disruption. Because first of all, the digital channels are open. You can send as much as you want to send using the EFT. No caps, no limits. No limits. It is your bank account balance that limits you. You can send as much as you want on the real-time gross settlement system, which settles much faster than the electronic funds transfer. But even for mobile money, and this is very important for the public out there, most people didn't know until maybe today that when it comes to mobile money, there are two categories of limits for an individual. If you are in what we call the tier 6, you can send up to 3 million shillings in a single transaction. But you can send up to 10 million shillings in a day. That is one tier. 3, one transaction, but 10 the whole day. Absolutely. Single transaction limit is 3 million. And then the maximum daily transaction limit is 10 million. But that is for the lowest category. However, you can be in the higher category, where you have up to 20 million shillings in a day to transact on mobile money. And the single transaction limit in that case is 5 million shillings. So Simon, you can send 5 million 4 times in a day to make a total of 20 million shillings. So that is another option for the public, especially for those that are dealing in big transaction volumes.
Yeah.
Now, if you come to SMEs and corporate accounts, the limit goes higher, basically. An SME can do up to 50 million on mobile money in a day with a single transaction limit of 10.
Okay.
If you go up to agents and merchant accounts and super agents, virtually it is limitless if you are classified as such.
Okay.
So what matters is your risk profile and your engagement with the service provider.
Okay.
So at an individual level, you can do up to 20 million on mobile money. Many people didn't know that. 20 million.
Yeah. In a day.
In a day. And that's 4 different transactions of 5 million shillings each.
Yeah.
So that's an option.
Yeah.
But I think the real deal is in the electronic funds transfer instructions that you give to your bank, the real-time gross settlement transfer instructions, where there is no limit. The limit is your bank account balance. Even when you extend it to things like internet banking and mobile banking, basically the limits that are set by the banks are for purposes of managing your risk appetite. But otherwise, there is no limit on the digital transfer channels.
You have a good chunk of people who came down 6% in terms of the entire transactions in the interbank use cheques.
Yes.
What do you know? We are dealing also with attitude change here. What do you know is the reason why people still insist on using cheques, the 6%? What's the issue that needs to change, maybe in attitude? I
think from where we sit, it is a lot of it is behavior change. And that's why we're here. That's why we're educating the public about the different alternatives that are available. We're telling the public that you don't need to draw cash. You don't need to carry cash, especially for the over-the-counter withdrawals. Cash is costly. Cash is risky. Cash is inconvenient. We've seen people being robbed on the streets.
That's true.
We've seen people being, losing lives because they're carrying. They're
waylaid.
They're waylaid after getting out of banking halls. So we're saying that it is inconvenient, it is costly, it is risky. And I know that one of the arguments is around cost.
I was going to ask the question of cost, but you can address it now.
Yes, one of the arguments is around cost. But for most times we don't think about the costs of carrying cash. And I can use an example, Simon, of drawing 20,000 shillings via mobile money, where you might pay maybe a cost of 500 shillings or 1,000 shillings at that agent point. But you're then going to board a taxi to take that money to someone, all right? Or you're going to give it to someone to carry. Let's assume, for argument's sake, that you are sending money on a bus. So you'll have drawn maybe 200,000 shillings and given it to somebody, maybe a bus conductor, to take to whatever up country. The inherent cost of that is not something that we usually think about. That person might not deliver the money. There is a risk. If you are taking it yourself, you're going to pay a bus fare. If you're boarding a motorcycle, you might be hit on the road, but you will also have to pay the fare for the motorcycle. Now think about it. If you sent it digitally, if it was on mobile money, anything less than about 700,000 shillings today is at a cost of 1,000 shillings. If you sent it. But if you withdraw it, it's going to be higher because there is also an excise duty and a tax. So if you sent it digitally, the transaction is going to be much, much more cheaper than you boarding a taxi or you withdrawing the money and risking by giving it to somebody to move it physically. So the costs of cash are not adequately thought through. Secondly, cash is also costly, even for us as the central bank. Cash is very costly to manage. It is costly to manage for the financial institutions. You've seen the vans that escort cash. You've seen
the bullion vans.
There is the sorting. There is there is quite a lot that goes on.
Guns,
the security, but also the actual management of that cash is very costly to the central bank. ATM machines and all sorts of things. Especially since we have very poor cash handling practices. I'm sure you have seen people glue cash onto bouquets of flowers and all sorts of things. So that makes the management of cash very costly. And so the central bank is promoting these digital alternatives as a way of not only embracing the digital world we're in, but also to reduce the costs that come with cash handling.
I'm looking at the day when cheques might disappear.
Cheques will disappear somewhere. That is a certainty. In some countries, this has already happened. If you go to South Africa, Namibia, Botswana, cheques are no longer, interbank, especially those that move across the sector,
banks, yeah.
are no longer, acceptable as an instrument for moving money.
Okay.
And indeed, we urge the public to embrace these digital alternatives.
Okay.
Yeah.
Would you say we didn't tell you? Central Bank is telling us come January 1st, 2027, the limits you can transact on cheques are still going lower within your bank and the interbank, unless you have a very good reason to convince your commercial bank, who will allow you based on a case-by-case basis or how they know you. We hope we added value to you tonight, and this is information you need to know how your money moves and why you should adopt digital options as compared to moving around with cash. That was the link. Thank you for joining us tonight.